Hello everybody! So now I'm gonna show you and explain to you a couple of components that you have to be very familiar with if you really want to learn how to read these charts, okay? So the chart's divided into the vertical and the horizontal, okay? So we got the vertical and the horizontal. The vertical shows price action, price, just price, up or down, right? That's the vertical. The horizontal shows time. So in the same as you move through time, you also move through prices. And if you understand the consolidation and relationship between time and price, then you can easily start understanding that each one of these elements that you see here represent a particular price in a particular time. Okay, so that's really important. So we understand time and we understand price. The other element I have right here is I have volume right here. These candles right here, all of these different candles right here, or bars, represent volume. So green represents volume on the buy side and red represents volume on the sell side. Okay, so we now understand time, actually price and time, and then we go and see volume. Okay, so those are three little elements we're understanding here. Another one that I want you to understand, and probably the order of this isn't necessarily the most ideal, but there is a way of understanding the momentum in which something is either going up or down. And when the momentum is actually descending or decreasing, it means that it's slowing down a little bit, right? So this right here is one of my favorite indicators. All of these elements right here are indicators. They're indicating something. This one indicates the momentum in which we're going either up or down. Okay, so in these lines right here represents a momentum going up, and then it signs representing the momentum going down. It has a direct relationship with the price action. It's trying to show how much pressure there is towards the upside or the downside. And there is an amazing strategy I want to teach you with the stochastic indicator. This is the stochastic right here. Okay, so it's a really cool strategy. So when that's under here, it is oversold. When it's above here, it is overbought. It means that it's reaching its maximum momentum and typically climbs right back down. I mean, decedes, goes right back down. Okay, so now we understand those elements. What else do we have? Well, probably the most important thing that we can think of is the actual price itself, the action of these prices. And these right here are being shown on Japanese candlesticks, which is one of the most popular ways of representing charts. It's become very popular. Okay, these candles, each one of them represents the battle between buying and selling, and who's winning, right? So the buyers and the sellers, that's what it is, or the bulls and the bears, right? So they all start forming several different patterns, and there are several different things. The candles themselves could show up in a very robust variety of ways. You know, you could have the candle like this with a little wick and a little wick. You can have the candle like this with almost no body and wick. You can have candles like this with a little body right here, and they all have different names, and I'm going to explain a lot of them to you. All right, so but we're just focusing on, we understand price is right here, time is right here. I have my the RSI, which is another one, actually the stochastic right here that shows momentum, and we have volume right here. Okay, so we've understood this, all of these different elements. Then we also have our candles that represent the pattern, I mean the price action up and down, okay? And they create patterns, all right? So we'll talk more about that. The other thing I have in here that you may be wondering, what is that? What is this blue line and this orange line? They represent an exponential moving average. There is simple and exponential moving average. And exponential moving averages are basically a average of all of the price action throughout certain amount of time, right? So, and they start sort of also forming a pattern. There are a couple things that happen when in price action that you know, that indicate you a concept of support and resistance. All right, so oftentimes when we are on a uptrend, the exponential moving averages actually work as support, meaning the price action tends to sit right above it, right above it, right above it. And that's a concept I explained to you before a little bit, that you know, you have to understand trends. You should not, ideally, you should not go against the trend, right? It's almost like swimming against the current of the river. It will be very, very hard. So what we try to do is that we try to trade in the direction of the trend. In this case right here with Solana, we have found strong support at about $31, and then we started rallying back up and creating a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And that's what we call a uptrend. Okay, so I already showed you that we always want to ideally work in the direction of the trend, so that, again, like I said, you use the current. It's almost like a boat that's going you know, against the current. It's gonna be very, very hard to move on that direction. Okay, so we've already understood price action, time, momentum, volume, the different candles that represent the price action, and we've had the opportunity to look at the exponential moving averages. I have the 10-day and the 20-day, and I can explain that in much more detail later, and I will. I just want to make sure that you little by little start understanding all of these different things that go into the charts, so that you can read them like a book. Okay, couple things I threw in here, and that's a bonus for you. I threw in some support and resistance lines that I have created based on the price action, and I will explain to you later how I create them and how I come up with them. Okay, so that's a support, and typically when you break through support, it becomes resistance, and when you break through resistance, it becomes support, vice versa. Okay, so those lines represent certain level of support that I have been tracking over time. Okay, and I hope this is very informative to you. I hope you like it. Subscribe to the channel. I'm going to be explaining more and more of what this means and what's going on. But right now, we understand that this right here is a combination of price and time being represented on a graphic. Thank you so much.